If you can't join them, you better join them. And if you can't beat them, you better join them as well. I think that is exactly where Kenya Power is right now. When you look at their latest drive to retaining this, what has been a mass movement out of their customer profile, which I'm going to tell you that 54.8% of their revenue, or what you can say, their left revenue, came from industrialists. That's big companies within the country. Let's talk about that. So when you have 54.8%, which is more than 50% of what your company is, and then you get them saying that, well, we might move away from you because we don't like your service and the cost of your service are way up there. Case in point, we do know that everything that we've spoken about in the performance of the economy, especially even when it touches on manufacturing sector, the biggest thing that everybody keeps on saying is the cost of energy. Now, let's go back again and see where we're coming from. Now, in what we are working right now, if you do know that sometime in 2020, bigger industrialists did get a reprieve in terms of how they were paying for their energy. Talking about the pricing of energy. Fast forward to sometime in 2020 again in the Finance Act, that was scrapped off. Why? The economy needed something. We did need something by the end of the day. And it was getting hot. The same people were complaining about the cost of energy. The same people who form 54.8% of the revenue profile of Kenya Power. Now, what does Kenya Power do then? They say, well, let's get into where they're going. Solar energy. Now, there are plans for them to distribute solar panels in those bigger companies and private homes. All right, let's take a look at exactly what their performance metrics are that force them to say, if we can't beat them, let's join them up. All right, let's take a look at what the selected KPLC growth metrics are. And you can see that if you look at growth revenue, and we're talking about quarterly, year-on-year, negative. Let's talk about profit margin. For us, that's exactly what we're looking at. Year-on-year as well. Whoa. Out of 5 years, then you can say they've been on a negative 50.54% again. If you look at the EPS growth rate, all right, which is a margin of 3 years, again, you're going to talk about them being on negative 67.41% again. So if we look at that performance metrics or growth metrics for KPLC, then everything is on a negative, which pretty much means anything that you do, you gotta do. Good. Financial strength for KPLC. Let's cross over and also talk about what their financial strength is as well. All right, let's analyze it as well. This is a bigger breakdown, and I want you to take your eyes to what is their quick ratio. Again, not even 1, they're 0.4. Current ratio, 0.5. And look at their debt ratio as well, which is also going to show you exactly where they stand in terms of the way that they run their business at 0.8. Debt to equity ratio standing at 4.2. I'm reading the latest one, which is exactly at 2018, because we do know, again, in 2019, 2020, especially in 2020, we were actually seeing the worst results from KPLC as well. Which therefore begs the question, what next for them? I mean, there is no next for them, because we do know that now they plan to redistribute or to join the solar business is actually the latest move. All right, let's look at what has been their KPLC, the net profit trend as well, and pay proper attention to where we are. And the latest result that we have here is out of 30th June 2019 as well. If you look at where we are, and we're looking at it from what will be, let's say, half-year results, really, or end-year results, from where we are, that is the 30th June of 2015 to 30th June of 2019, again, you can see exactly what the net profit trend has been. The best being 30th June of 2016. From there, it was a downward fall up to where we are of the latest result that we have from them of the 30th June 2019, which shows you exactly the position that KPLC finds itself in today, which means that whatever they gotta do, they gotta do. How this is going to play with the players in that area is yet a discussion we will continue to have here on a business All right, let's talk about a surprise announcement from Safaricom, and it comes like this. We do know it's been good news for them. Let's start from there. When we entered the COVID-19 pandemic, you could transfer below 1,000 shillings for free. Fine. But something happened as well, if you do know, your mobile money wallet, and we do know when we talk about mobile money wallet, we're essentially talking about Safaricom because they account for 99% of business-to-business transactions within the economy, was increased to 300,000. Meaning, you could have a discussion and say, wow, whatever they lost in free transactions was exactly what they could recoup in the increased mobile money wallet limit. But they came back and said, no. So let's see exactly what announcement they made as per that. Now, they came in and said that if you look at what their profits, the half-year profits were, they dropped 60% to 33 billion. And this was due to that period, the removal of the fee of transactions up to 1,000 bob. Well, they said things are not okay. And they were waiting for when the Treasury was going to announce for them to expunge that specific cushioning mechanism that was extended to you and I as we were fighting the COVID-19 pandemic and the associated effects to the economy. Good. So they were removed and they said, well, things are doing good on our side. So they came yesterday and they announced that now there's a surprise dividend that's going to be paid on or before March 31st. This year, and that's a surprise because we do know exactly when they pay. We do know that they normally pay at around August and September, and that's a one-off. But now, this one is a bit earlier. And they're saying this is due to more than expected performance. And it comes like this. For those of you who, of course, you have to, if you're interested really on our lookables, then you see exactly where they closed yesterday at 37, which is, again, the biggest jump yet this year. Because the biggest news that we give here on Business M is when they got to 36 bob in terms of the price standing on the lookables. Now, they're saying that they're going to pay 18 billion shillings in terms of that dividend. And let me tell you who is the biggest beneficiary. The biggest beneficiary in that is going to be Treasury, which we do know has a 35% stake in the listed telecom that is going to enjoy 7.2. Sorry, let me just give you the price. That's going to enjoy 6.3 billion. And also Vodafone Group PLC and Vodacom Group Limited that are going to share 7.2 billion shillings. Good. So can we go back and look at exactly where their performance has come from that has led to this surprise announcement by Safaricom? All right, let's look at what their revenue profile was as of Q4 of 2020, and I'm going to see exactly what it is that we're saying from that data in terms of Safaricom's revenue profile as of Q4 of 2020. Now, let's start from their service revenue. Let's start from there. And you can actually say that it has been on an increasing trend all the way from 2017 to 2020. That's the only conversation that you can have around what their service revenue has been. All right, can we therefore go back and look at what their revenue was in Q4 of 2020? Look at that. M-Pesa revenue, again, accounting for that amount, and mobile data coming in as well as one of those leading entities in terms of their revenue profile. Okay, let's look at what is the general service revenue, therefore, for the financial year of 2020. They can say that M-Pesa continues to account for the biggest revenue profile at 33.6%. Outgoing calls in the entire of 2020, 34.5%, despite the talk that, we're moving away from calls. Fixed negative, really, and mobile data at 16.2%. This mobile data, as you can see, changed in Q4 of 2020 and replaced outgoing calls because we do know the economy shifted online as the effects of the COVID-19 pandemic really said that you gotta be online whether you like it or not. Good. That is good news for them. And if you are a shareholder of Safaricom, then enjoy, because they're saying things are doing good. Now, farmers are being warned as well this morning of early planting. And that is because of what has been an unpredictable weather pattern this year. Well, you have to wait until March to start planting, and you've been told that if you start this month, then that 1 month period may actually affect the performance of your maize. And this, they've been told, you wait for updates from the weatherman on exactly whether it's okay for you to start this February or wait all the way to March. That's a warning, and the news ends there. All right, so let's look at exactly what we've been bringing into the country in terms of maize imports, because that's the only way this news can touch on whatever it is that we have from the harvest. Let's analyze it this morning on a closer outlook, 2015 to 2019. That's what we have. Now, the biggest quantity of maize import trend we experienced in 2017, and you do know why, because we were experiencing the effects of what was our electioneering year was in 2017, and that's when we had the biggest imports. And 2019 we did have that resumption of what we can call normal numbers, and we do know the politics of maize in this country when have been, and we have seen even the Ministry of Agriculture take proper measures in terms of regulating how much comes into the country and what comes into the country as well in terms of the prices of our imports into the country. Okay, can we look at an email as well, which is going to represent the same data as well, that the biggest was in 2017 before we got back to our normal numbers in 2019. Good. Now, good news or bad news, depending on where you are. MCS finally got the 2 million car grant. Fine. They've been fighting for it. Now the Salaries and Remuneration Commission came and told them, well, you can get it. Fine. Two ways to talk about it. MCA, good for you. If you and I are looking at it, I'll tell you how we're supposed to look at it this morning. But again, let me tell you other people who have got a pay rise. Members of Parliament. Now, we do know that, well, they have been in recess for quite some time, and that was because of the effects of the COVID-19 pandemic, which we do know that if you are 58 and above, then you are exempted from mass gatherings. In fact, that was a directive from the Ministry of Health in conjunction with the national government. Fine. Now, if they come back, they're going to sit all the way to 9 p.m. And they're going to sit twice a week as well, meaning that they're going to get 10,000 bob in terms of that increment, because we know they get 5,000 bob per session. Fine. Meaning that at the end of the month, we're going to have 100,000 bob that's going to be paid to our members of parliament. Add that to the billions that were released again to go to MCA's car grants, which again is to the tune of billions as well. So as we talk about the effects of the COVID-19 pandemic on the economy, seems like there is a section of this government that is enjoying, if you belong to that section as well. So now we took it upon ourselves to look at where our recurrent expenditure has been. This is the money that, whether you like it or not, you got to spend. And we do know where we are, 53% of our national income. We do know that we are supposed to bring it back to 35% of our national income, which has been quite a uphill task for even the Salaries and Remuneration Commission, who came out and said, well, they don't think that the recent grants to MCAs and the 100,000 that's supposed to be now paid for members of parliament because of the effects of the COVID-19 pandemic is going to balloon our wage bill. Let's take a look at where we have been in terms of that recurrent expenditure in the country. Yes, that is the conversation. 2016, 2017, all the way to 2019, 2020 has been on a rising trend. We therefore ask the question, was this the best time for us to give MCAs that grant and talk about members of parliament now sitting on 100,000 per month out of the sanctions because of the effects of the COVID-19 pandemic? What questions really do we need to ask around this area? That I leave it to you to look at it and then say, wow, the talking points would be on exactly where you belong on that divide. If you're part of them, good. If you're not, for us, it's for us to look at that recurrent expenditure. Let's also look at another area this morning, because we do know that KRA announced that they had surpassed their tax collections for the month of January. Good. So, can we go back and look at what that trend has been? Let's look at where we have been in terms of a tax revenue 2020, 2021. And also this morning, we are going to look at what were the biggest hits and bites out of it. Let's analyze it on a closer perspective. July 2020 all the way to December 2020, we have been on a rising trend. And this is exactly what the Kenya Revenue Authority is saying, that is pointing northwards in terms of what would be our fortunes this year in terms of our tax collections. And they're saying with the resumption of corporation tax, pay, VAT, and other taxes, and with the introduction of minimum tax, then they're going to continue announcing, I would say, positive news in terms of the tax revenue for the financial year 2020-2021, going back to what has been the worst tax collection out of the effects of the COVID-19 pandemic, which also saw the government really go into much borrowing to fill those gaps out of what was the effects of our revenue collections within that period, the period of March all the way to where we were at the end of 2020. But this morning we ask, is this going to be a trend that we expect to continue to grow, or 2021 still has more surprises for the taxman and the economy? Because we know they are pegging their tax collections also on the chances of the growth of the economy, which we do know the number that Treasury has been giving us, 6.2%. Experts are saying, well, that might be too optimistic. We have numbers. Side on Investment is saying 4.9%. Others are saying 5.2%. That is from IMF. So what is going to be our number this year? And are those news still going to be on the positive end as well? All right. Other than that, let's take a look at exactly how our markets closed yesterday. That is the end of trading yesterday. Before we continue with the rest of the business here on a Business AM, NSE All Share, and we're seeing